Welcome to Simplifying FATCA and CRS Reporting. My name is Dave Beard. I'm the product manager overseeing our FATCA product, Alpha Cat, and with me is Joe Barrett, our resident expert in this area. With that, I'll hand over to Joe, who will start our session. Thank you, Joe.
Thanks very much, Dave. So hi everyone, my name is Joe Barrett. I'm a senior business analyst at Tax Systems. So I'm responsible for making sure our products are compliant with the latest regulations and meet our user needs. And as Dave has already alluded to, Alpha Cat and FATCA and CRS is one of the areas covered by my portfolio. So I'm going to be sort of giving you some of the latest updates today. So just to cover briefly what we're going to talk about in this session. So for everyone's benefit, we'll just do a quick recap of the story so far on FATCA and CRS. So just a very short how we've gotten to where we are today. We're then going to talk a bit about some of the regulatory changes which come into effect from this year. So there's a particular change on CRS and a particular change on FATCA as well that we're going to explain how these are going to impact on you. Once we've sort of looked at the impact those have, then we'll take a step back for a minute and look at what options do you have to address your FATCA and CRS reporting needs. What approaches can you take to addressing this challenge, and look at sort of a balanced view of what are the advantages and disadvantages of each of these approaches to help you understand which might be good for you, help you sort of perhaps get a bit of perspective on what you're doing today and whether there might be a better option out there. We're then going to move on to the technology side of things, so I shall hand over to Dave at that point. We will look at the FATCA and CRS software and some of the latest advancements in that, and talk a bit about not only the software solution, but the XML conversion service as well. Of course, we're missing from this agenda, but as Dave mentioned, we shall make some time for questions at the end as well, if you have any. So, quick recap of the story so far. I'm sure as many of you are aware, FATCA and CRS was established in the first place as a mechanism to try and address offshore tax evasion. So the idea was that by making financial institutions report on a regular basis the money they hold for offshore individuals, that this would be exchanged amongst tax authorities, and tax authorities would then be able to compare what comes in these reports versus what's subsequently declared through self-assessment by individuals. So this kicked off with the introduction of some global rules. So from the IRS, we had the FATCA rules coming into place. So a particular set of reporting requirements. From the OECD, we had CRS, so almost identical to FATCA, similar reporting requirements with a standard set of rules set out. Those rules were then implemented at a local level, so they were put into local tax jurisdictions legislation in order to enact them, and in order to sort of make it a requirement to actually start submitting this information. Also to put in place the technical way of doing so behind it as well. So not only what you need to do, but guidance on how you should be doing it. So that led to the first exchanges of data, RFIs responding to this requirement to submit the data, going to great efforts, particularly in the first year, and indeed sort of an ongoing need to analyse the accounts that they hold and submit the required details for these to the local tax authorities. We then had the first exchanges between the tax jurisdictions. So once they got all the information from the reporting FIs in their respective jurisdictions, they chopped that up and shared it with each other where they did have information about individuals who are residents of other countries. That was the idea. of how it would work, that you would have this information exchange done and then it would repeat year on year. What we saw a bit more of in practice, though, was that there are just slight tweaks to the rules year after year. So after a lot of data was submitted in year one, the local tax jurisdictions got to see what people were submitting and had a good feel for the quality of the data. And they found in sort of some cases that perhaps there'd been misunderstandings, or perhaps the quality wasn't quite up to scratch of what they're receiving. So they tweaked their rules very slightly. So you might have seen this coming in the form of just extra bits of data which might have been required, or a refinement on their portal. So normally when you upload one of your reports to a jurisdiction portal, it will do some form of validation on it to check the information in there, check the quality of it. Those validation rules might have been a bit more slack to start off with. So as more information was submitted to them, the local jurisdiction started to tweak those rules a bit just to make sure they got better quality information coming through to them. So that's been sort of going on an ongoing basis. So we've had a number of years of reporting going on so far. So you will have submitted a number of reports and you may have encountered slight tweaks to the rules as we've been going along. And to report more recent news, indeed that's what you hear a lot of in the news these days. Last year we had the impact of COVID, and that led to some deadline extensions. Of course, the pandemic was very disruptive to a lot of people's practices. So we saw most, if not all, jurisdictions either extending the deadline for submission to give you more time, or relaxing any penalties around late submission to allow you to submit your reports just whenever you are able to, as long as you're actually getting that information in. So this year, those extensions are less common, so it's starting to get back to business as usual. We have actually seen in the last month that some jurisdictions have announced extensions. So the British Virgin Islands, if you report there, Malta and Australia are a couple who have announced extensions to their standard filing deadlines. These aren't so generous as they were last year. So typically last year we saw a lot of extensions in September time or towards the back end of the year. This year, the extensions are more to June time, what we're seeing, or a month at most 2 months after the standard deadline, but seem to be much less common. We may see more coming through, but we're closing in on the deadline dates already. So in terms of changes that are coming into play this year, then we're not seeing so much tweaks at a local level for the tax jurisdictions. We have a change at a global level, so a change that's being introduced by the OECD for CRS and by the IRS for FATCA as well. So what are these changes? Let's have a look at them one at a time. So the OECD, the big change they're making this year is that they're introducing a new schema, version 2.0, which has been in use from the start of this year. If you don't know what a schema is, think of that as the set of electronic tags that are applied to the data that you submit to the tax authorities. So those tags help machines read each piece of data, and it obviously helps then with the exchange of information between the tax authorities. So much like I touched on the previous slides, as local authorities learned from each other, learned from the information that was being sent to them, indeed, the OECD learned about the information that was being exchanged and the quality of data that was being exchanged between tax authorities and how their original global rule set had been interpreted. So this version 2.0 reflects their learnings from it, and indeed their article, when they release this schema, reflects that the intention is to target better data quality and easier exchanges of this information amongst all of the countries that have now signed up to be a part of CRS. For you as a reporter of information for CRS, there's little change actually to the data that you're reporting. So you will still report the same information about reportable accounts as you did in previous years, and the same data about your RFIs that you're including in the report. There's only little subtle changes to the data you're reporting. So you'll see that, or you might see that the list of countries has been updated ever so slightly just to reflect global changes, and the list of currencies are the same. So there's very little on the surface you'll see from this. However, where this will impact you is you've got to make sure that any report that you submit to the authorities this year is tagged up using this latest schema using version 2.0. And when I say any report, I mean whether you're reporting data for the 2020 period or whether you're reporting data for any earlier period. Basically, any CRS report submitted to the authorities this year should be using schema version 2.0. For any of you who are filing in the UK, while you may include CRS data, note that HMRC do have their own schema, so it doesn't quite apply in the same way, but for many other jurisdictions, if not most other jurisdictions out there, the CRS data that you submit will be using this schema. So what's going to happen if you're not using that? Well, quite simply, you'll see that as soon as you try and submit a report on a tax authority portal, it's going to reject it. So there's, amongst these set of tags, there are key things which can identify whether you're using old schema or whether you're using new schema. And indeed, if you open it up, you'll see, if you look carefully, there's version 1 and version 2 in there. And we've already seen some of our customers jumping the gun a bit at the start of the year and trying to submit a CRS report for older periods, so sort of 2018, 2019, before our latest version of the software with this new schema was actually installed. And what we saw as a result was that they were getting their data rejected when it was pushed up onto the portal. That was easily resolved by just installing the latest version of the software and producing the report again, but it's something to be aware of because you won't necessarily see it until right at the end of the process. And indeed, it's something that you would probably expect to be sort of dealt with under the hood by any software that you're using. On the FATCA side, the big change here is around the tax identification numbers and reporting of these. So for reporting years to date, it's been possible to report FATCA accounts without having a tax identification number in there. So when you did have any situation, a reportable account where you didn't know the TIN, you could insert a replacement value, which would be 9 zeros or 9 A's, depending on which jurisdiction you're submitting to. The idea was that this was sort of a relaxation of the mandatory requirement and giving RFIs time to locate this TIN detail. So to look into the holders of their various accounts and more time to basically find those identifiers for the individuals. What we're going to see from this year, reporting of the TINs is now mandatory, so that relaxation has stepped back. It's not completely gone, but there is an expectation that you should know the TIN numbers, which are included in your reports. So by this, if you don't include any TINs, it's not necessarily going to be seen as non-compliance with the FATCA reporting, but it could lead to an increased chance of inquiries being raised by the tax authorities that you're submitting to. So if you still don't know the TINs, you can still exclude them from the report. So you can still put in those 9 zeros or 9 A's, but you are more likely to see inquiries from the tax authorities seeking to understand why there is no TIN and also potentially asking for evidence of efforts which have been made to obtain that TIN as well. To sort of combat some of that, there is a proactive option that's been introduced in this year. So while you can still send in those 9 zeros, 9 A's, there are now alternative combinations of 9 digits that you can send in. So for example, there's 9 twos that you can put in for a tax identification number for a particular account. And This means, or this translates to be interpreted as you having a pre-existing individual account with the only US domicile being the place of birth. So it's not necessarily stopping inquiries, but it is helping to communicate efforts. You will start seeing on various tax jurisdiction websites more information about these codes which are available and which ones they accept. So if you look at, if you're reporting to the UK, for example, amongst HMRC's handbooks on this subject, they've got a list of all of the codes which are available and how those codes are going to be interpreted. HMRC's guidance is one that got out there quite early on, and we're starting to see more jurisdictions publish equivalent guidance as well, as indeed these codes have come down from the IRS and are now being implemented by local tax authorities. So it's worth having a look out for those. If you're unsure on sort of the content of all your reports so far and whether you are including TINs in there or not, it's a good time to be looking at how much you have and reviewing the efforts that are being made to gather this data, and then perhaps consider those options which have been made available to you as well, which can help communicate the efforts that you're trying to go to sort of address gathering these TINs. So as we sort of recognised over these last couple of slides, you've got constant sort of changing or tweaked rule sets and new parts to these new global rule sets, as we see on screen now, coming in on a regular basis. So it could lead to sort of questioning what's the best approach to address all this that's going to fit for you. There's every chance that you might have put a process in place when the reporting was first required, and then perhaps just stuck to that since, so for a number of years, and not look to make any change. So it could be a time to sort of have a look at which is the best fit for you. So what we've recognised from the experience we've seen to date of what our customers are doing, we summarise the options of the approaches you have to reporting for FATCA and CRS under the 5 choices that you see on screen now. So either a mix of doing the process in-house or outsourcing the process. And reflected on screen is a few sort of pros and cons and lessons that we've learned about the advantages, disadvantages of each of these approaches. So I'm just going to spend a minute running through those. So option 1, in-source, do everything in-house. So have individuals gather the data. You might have skills in-house for individuals who can convert data to XML format and get all those electronic tags applied. Perhaps they're already doing a similar exercise for other reporting requirements. So that can be a great option there if it's something that you have wider resource already looking at. One thing that I suppose might come to mind as to whether you might reconsider this is really, are they managing to keep up with these changes? So we've seen changes coming in. Have you got the right people in-house who are firstly aware that there are these changes coming in? So is there someone monitoring the sort of OECD's rules for the schema you need for CRS and the local jurisdiction tweaks all the time? Are they managing to keep up with that? Are they alert to it to start off with? And secondly, are they having to, are they then able to apply the updates? So if you've got in-house resource doing this, perhaps you saw it as a one-off exercise for the first year, just to get your process in place. That would only use some sort of certain resource to do the conversion to XML, for example, and then your solution can just run year after year. And those who set it up might be able to step back. Perhaps a smaller team just takes forward the regular reporting requirement. And it may not have worked out that way because, quite simply, as we've seen, there are constant little tweaks to these requirements or a new schema coming in from the OECD this year, which means you haven't necessarily been able to downsize that team. So are you really gaining the efficiency from it? Another option in-house, if it was appropriate for the size of data that you're reporting, is that we did see a number of governments publish a form filler. So this would be where you could just go online, you'd get a nice table laid out in front of you, and you would simply enter the details of all of your reportable accounts. Great for small reports, and certainly because it's free, but these weren't necessarily available in all jurisdictions. So it did depend a little bit on where you were actually reporting. And of course, the idea of just manually entering data means it could lead to error. And thinking about CRS, well, we've seen the scope of the number of countries that you report for. In other words, the number of countries signed up for this had doubled in the second year. And then it still continues to creep up. So you still have other countries gradually signing up to it. So maybe the scope of what you're reporting has actually expanded quite a lot now, which means manually putting data into a form may not be the best option. Perhaps there's a more efficient way of doing it, particularly when you have to do it year on year. Progressing beyond that, there's the idea of don't do the software side yourself, but perhaps use your sort of skill in-house, your tax personnel in a lot of cases to do the work, but just purchase some software to do the conversion part and the validation part for them. So here, that kind of takes away the concern around having to make sure you're up to date with the latest updates from various jurisdictions. It takes away any sort of effort of needing to improve the process or make it easier for individuals, because that's really down to the provider of the software to do that. It can be a sort of costly option potentially though, depending on the cost of the software. So you need to have a think about how big scope have you actually had to report. So do you in fact not have that much reporting to do? And does that really then justify the cost of purchasing a piece of software and getting someone in-house to do it? What we've also seen as well, and can be a downside to this, is that FATCA and CRS is turning out to be a very cyclical process. So it has a peak of activity around sort of April, May, June time as we get close to the filing deadlines each year, and then it completely dies off in terms of activity throughout the rest of the year. So it's quite understandable that those who are having to do the reporting need to re-educate themselves a bit and remind themselves how things work. And we have indeed seen this in practice. And what can happen if you don't have people up to speed is that you can make perfectly innocent errors, in the data that you're reporting. And if you do make any errors in the data you're reporting, then this might lead to the need to do a correction report, for example. If you haven't come across corrections for FATCA and CRS yet, it's more complicated to do than you might think. So unfortunately, it's not as simple as just submitting a report with the right detail in again. You do have to look at what you submitted previously, point the new report towards data that you previously submitted and how the new data in your report corrects that. Or you can have alternative ways of just having to send in a report which deletes what you previously reported and send in a new one, but it can be much more effort to do a correction. So certainly there's that, it's a great idea if you can just get it right the first time round. What we have seen as well is that there was a big boom of software providers in the market to start off with, and gradually some of those have disappeared. You tend to see that with a lot of compliance software, that you will get a rush at the start when a new compliance requirement comes in, and then you will start to see some providers withdraw their products. And indeed, there is less availability on the market now. That might have impacted you already. It could be impacting you soon if you've heard from your provider that they're withdrawing, and indeed that could force your hand as to just having to reconsider. And then finally, there's the outsourcing options. Now, these are always great in terms of getting like a second pair of eyes onto your reported data and getting some more experience in there, and certainly sort of breadth of experience, as outsourcers do a lot of conversions for the different customers. So That helps in, as I say, even simple mistakes can lead to the need for a correction. If you've got a second pair of eyes and an expert pair of eyes on the report, then that can really help reduce the chance of making any error and therefore reduce the need to make any corrections. Of course, the flip side is that with that expertise can come expense. So with that, if you do have a lot of reports, say, if you did just initially ship this out because you had a lot of reports, perhaps you didn't have the time for people to do them, then that can lead to a large cost. And what you can see, although it is a cyclical process, when you're outsourcing work, you tend to need to have someone on the inside who provides the data in the first place and might need to review that data before, or should be reviewing that data before submission as well. So you may have just built up that in-house knowledge over a number of years. So do you in fact have the experience now? And as I say, when you've got a large amount of reports, might it actually be more efficient just to get a piece of software and have an individual or individuals internally do this process for you? So exactly which of these options is most suitable for you is going to depend on your circumstances. Hopefully that's given you some food for thought in terms of which one might be the best fit for you of the options out there. As we mentioned sort of towards the start, we do provide two of the options on here. And at this point, I'm going to hand over to Dave just to take you through the two options that we do provide.
Thank you, Joe.
Bear with us 1 second while we just switch screens.
Yep. Right. Okay. So we're going to initially look at the software, FATCA. It's a reporting compliance platform that is future-proofed and covers the data management, your compliance, over 20 jurisdictions, and your analytics and the review within that. It also enables you to cover both FATCA and CRS, and you can have mixed data within the templates as well, and we'll see that in the demonstration shortly. Clear requirements for your data to be reported, and there's up-to-date validation and requirements are included in them. And there's also automation of the XML reports for submission, so all of that gets produced for you. And there's also summaries to help you understand what you're going to submit, and we'll see those as well. Enables you to get your reporting right first time, reduce the risk of corrections, save time in keeping up to date with changing rule requirements, and use one consistent approach for reporting across multiple jurisdictions, be that for FATCA or CRS, and reports of any size ranging from 1 to tens of thousands of reportable accounts. How to improve FATCA and CRS, a live demonstration. So we're going to look at in terms of this, we're going to look at the source data, we'll look at the conversion and output, and then finally the XML, which then is available for you to submit and upload to the relevant regulator. So with that, I'm going to switch across to FATCA. Just give me a moment. And I'm just going to move over to that. Okay. Right, so this is FATCA. So first of all, what we recommend is you set up a management group. This gives you a container in terms of putting your data in. So just walking you through that, come through into your global, you can set up your management groups, and you can set up as many management groups as you want. So we recommend at least one for your different types of filings that you have and for your different types of clients that you're working with. You can also do role assignments and roles. So if you've got a larger team, you can have some breakouts and distinction within what different people can do within the application. The next part is once you've done your management group is then setting up. So if it comes through to looking at all the jurisdictions, also with the jurisdictions, you can also have your preferences. So if there's only a limited set of jurisdictions that you might be reporting to, you can prioritize those. So those are the key ones that you see first. And so that again, just giving you the speeding up and giving you the efficiencies. So we've already pre-selected HMRC, and we're going to be doing the FATCA one today. So the next part is collecting the data. Now, in terms of the data, what we do also provide is you can create bespoke templates to then collect the data. And on these, you can go in and select which jurisdiction is. In this instance, I've got the United Kingdom, and you can create a template to send out to a colleague who's providing you with data, or even to, if you're running a bureau or an accounting firm, to a client who's then going to be providing you with that data. And you can create particular spreadsheets for people for each country. And that just really helps in terms of the efficiency of the data, making sure you're getting it back in a standard way. We also provide 2 templates, pre-filled templates as examples, where they're both looking at CRS and FATCA. And we're going to be looking at using one of these, looking at the United Kingdom CRS and FATCA template today. So I'm going to go ahead and browse to where I've kept that, and then I'm going to open and import that. Just while that imports, and now it's in progress, and it tells me it's now complete. So what that has now done is it's imported the information, and it's also done a check on the information. So immediately it tells me that I've got 1 error. It also could tell me if there's some warnings. And warnings, you can choose whether you want to leave, but errors, we'd recommend you always correct those. And what have we actually imported? So let's, first of all, I just want to go to the analysis. And what the analysis is going to do is just going to really focus on what we're doing. So we're focusing on FATCA now. And what you'll see is when we go to our organizations, it's actually grayed out the ones that I'm not interested, because these are not for FATCA, because these are European, and we're going to be focusing on the FATCA ones. And then when I do people, you'll see we're just focusing on our US accounts, and the other ones are grayed out. So again, it's just giving you a targeted point in terms of what you're doing. If I was doing CRS, the reverse would be true. Going through our accounts and then our transactions. So let's go back to our errors. If I click on the error, it'll now open up to me. And I've got a number of options with the errors, just as it comes through. I could, if I've got a lot of errors, then I might actually want to go back to the Excel and actually correct it there, or go back to the person who's provided me with the information, asking them to correct the Excel, and then re-import it and check it again. Alternatively, we can also edit here within it, the report, and I'm just going to do that today, and select the country, and we'll just go down and we find the UK. Apologies for that. I've selected the United Kingdom, I save that, close that, it'll now refresh, and the error should go away. Always attention in a demonstration when it pauses just for a moment, but that is all done. So now we can see there are no errors and there are no warnings. So now we are in the clear to go ahead, and you can also see the data here as well. You can see the data. So there's a number of places you can review the data and actually see it within the application. So now that we know that the errors and warnings will be dealt with, and it's just refreshing where we are, we're going to close that. And the next thing is to actually go and create the file. So I click on create, and I'm going to select the one to deal with, and I'm going to click generate. So now it tells me here that it's generated it, and I go through to manage. And now this is, I can actually see the state of where we are. So when the one I've created, if I click on Excel, I can get a summary of, just give me a really good summary if I wanted to supply to someone to review who wanted to have a look at it, can actually see this is all the data in Excel that I'm looking to push out. So this has the data, and here's a summary. So I can just actually quick and easily check how much unique accounts, the account holders, individual holders, and various other information. And if there were more currencies on here, there would just be more lines coming down on this summary, and likewise here within the main data section of that. So that gives you a nice, easy to read summary of what I'm intending filing. Next, let's go on to our actions. So at this point, I'm happy with my data. I know that there's no errors and warnings. Those have all been cleared. If there's any warnings, I'm choosing to ignore them. I mark that as ready. I confirm that. I can add a formal approval as well if I want. And then I can go to export the submission. And now we're going to export it. So at this point, what it does is it pushes out an XML file, which comes out for the demo data. It's got a unique reference. I save that. that comes through. Click OK. That's all done. Also, I can see again just a log of all the things that have happened in this. So in that point, what I've done is we've brought in the data, we've checked the data, cleared any errors and warnings, and we've now created the XML file, which you could now go ahead and upload that and submit that to your regulator. So that is the software. Very easy to do. And that brings us back. So therefore, one has been exported. We're now ready to go and do more. And so at this point, I'm going to move back to our presentation. Just bear with me one moment. There we are. Right. So we've just gone through a demonstration of AlphaCat. So if you were wanting to in-source it, and we've seen the source of data. So there's a template that I can either have a general one or I can tailor it, and how we've converted the data. So I brought in, I've done a check, and then we've actually outputted the XML and also got a human readable version of that XML if I need to provide someone who wants to just do a review of what we're about to submit before you actually submit the XML. So we've done the demonstration. And so now the best choice. So obviously there's a service option. So why software? Well, it automates the creation of reports for more than 20 jurisdictions. It supports report sizes of anything from 1 to tens of thousands of accounts, and consolidates into one database and automatically divides it into FATCA and CRS reports. It also validates per jurisdiction. There's automated conversion into XML and accelerates implementation of the rule changes. Why a service? Well, it's multi-jurisdictional. It confirms with the changing regulations, data gathering templates. It's human readable report in a human reader report of the data in XML for review content before uploading. And why tax systems? We have an experienced team that is familiar with the requirements of FATCA and CRS reports. It's a cost-effective alternative to buying software where amount to be reported is low, and the data is treated with the sensitivity that is required. So let's do a recap. Ongoing change. Requirements continue to change, and you need to stay on top of those changes. Lessons learned. Those caught by requirements are making mistakes and doing things inefficiently. Review approach. Have you reviewed what you're currently doing versus what you set out to do? Consider the options. Is there an alternative option which may be a better fit? And take action. If you need help, please speak to us. Do you have any questions? Whoops. If you have any questions, please do put them in the slides. Joe, do we have any questions at this point?
As yet, no, but we'll give everyone a minute or two to, if they do have a question. But I would also add as well, you can see on screen there some contact details for us. So if you'd rather speak to us one-to-one, then do feel free to get in contact, and we'll quite happily talk through your circumstances and anything we can do where we might be able to help, or if there's just any clarification you're looking for on anything we've asked today, then that's an option for you to do it. So if you would rather speak to us one-to-one, please do feel free to get in contact.